Hello, everyone. Welcome to the Green Room, where we speak to fintech entrepreneurs and leaders in Asia about their careers and industry insights. We're supported by APIX and Brankas. A big thank you to our sponsors. As usual, I'm Amrita Vir, here again as your host, and this is the 5th episode of the Green Room. So today we are speaking with Taejun Shin. He also goes by TJ. And his innovative approach to microfinance in Asia, especially as co-founder and director of Gojo. So before we talk to TJ, as usual, Todd Schweitzer, the CEO and founder of our sponsor Brankas, will talk about our other sponsor APIX and their fintech community. Then we'll spend some time talking to TJ about his work. And then as usual, we'll save the last few minutes for questions from the audience. Big thanks to those who have already submitted during event registration. But if you have some more, please send them along in the Q&A box. Send them along as we go. We'll try to cover as many as we can at the end. And I guess if I don't see any questions, I'll just keep talking. Anyway, with that, let me turn it over to Todd for the APIX announcement. Over to you, Todd.
Yeah, thanks, Amrita, and thanks, TJ. Looking forward to learning from you guys today. My name is Todd Schweitzer. I'm the CEO and co-founder of Brankas. We are an open banking technology provider across Southeast Asia. And today I'm representing APIX, which is a platform really existing to strengthen the bonds between fintechs and financial institutions and make it easier for FIs and fintechs to connect, build new products, and solve big problems like those facing microfinance institutions. So really, this is a public organization, right? So it's the founding members are the ASEAN Bankers Association, the IFC, and the Monetary Authority of Singapore. And then there's a number of supporting members, large technology companies, as well as small technology companies like Brankas. But really the goal of APIX, if we go to the next slide, so this is really, think of this as a public, kind of a public-private initiative to make it easier and reduce friction for financial institutions and fintechs to build cool stuff, right? And for any of you on the FI side, if you've worked for a large financial institution trying to get a new fintech initiative launched, getting it through compliance, procurement, IT security, maybe there are other business units that also that have a point of view. Just getting a testing or pilot launch can take almost a year or more. And on the fintech side, especially for B2B fintechs, just getting in the door and getting a pilot launched with a financial institution is a massive, typically resource effort to make that happen. And so APIX is really there to help speed up the matchmaking and speed up the innovation on both sides, right? So the idea here is that as a financial institution, you can post some challenge statements, or you can actually develop a proof of concept with a fintech, but in a secure cloud environment that's provided by APIX, right? So that's the main idea is fast prototyping, matchmaking, and very quick kind of POC development without needing to go through the typical hurdles that usually take place here. Next slide. So one of the newer features, and it's been really successful. In fact, there's a couple of these ongoing now. Is APIX offers what is effectively hackathons as a service, and it's cutely called the APIX Hack Coliseum. What this really is it's a way for financial institutions or financial service industry associations, or even just a group of fintechs, to host and manage a hackathon end-to-end on a secure environment. So for example, recently we had the FinTech Alliance for Women hosted on the APIX Hack Coliseum. They had 3 or 4 challenge questions. And basically what it looked like is they posted the challenge questions. Fintechs could upload their proposal. Judges can log in using the hackathon system to choose who is shortlisted for their solution. And then the shortlisted hackathon participants can actually upload their code to the IDE, the developer environment of the APIX Hack Coliseum, and then the judges can actually review the actual code and make comments on it and do some scoring, all inside this secure environment. So it's basically a very easy an end-to-end service for hackathons to be developed basically at a moment's notice, right? So Brankas is a technology provider here. We're also, as part of APIX, I think we're supportive of this because this is a great way to shortcut financial innovation, again, between FinTechs and FIs. Next slide. So here's a few examples, right? So the BNY Mellon Connect 20 Challenge is ending next month. The FinTech Alliance for Women has just ended, and then there's a number of others. Go to hackathon.apixplatform.com to find out the various hackathons that are coming up, or if you're interested in hosting one, I'm sure the APIX team would love to talk to you about how to make that happen. Next slide. In addition, so during the whole COVID fiasco, the Singapore government and its partners have created a number of support mechanisms for FinTechs in particular. So for FinTech signing up to APIX, you get free 6 months access. There's insurance and cloud credits available. And then there are funding mechanisms available, both grant funding and venture investment funding that are fast-tracked by way of APIX, right? So the AMTD grant screen, they've allocated 4.5 million. So through the business growth grant, there's up to 4.5 million Sing dollars available for POC development, as well as the Solidarity Investment Scheme through AMTD that provides equity and convertible note financing and co-investments. So this is venture capital for startups that are doing new projects on APIX. So if you are one of those interested startups, please sign up and start that process. Next slide. Yep. So in addition, there are a few more benefits if you're on APIX, right? So program with Google Cloud and with AWS, as well as workspace discounts for Ascendas in particular. Next slide. So I think that's it. So you can learn more on apixplatform.com. Follow on LinkedIn, where we post a lot of updates, including webinars that are ongoing. And that is all from my side. Over to you, Amrita. Thanks.
Thank you, Todd. And thank you again to Brankas and APIX for supporting us. Now, it is my pleasure to introduce Taejun Shin, co-founder of Gojo. We're going to talk about Gojo shortly, but first, welcome, TJ. Thank you so much for being here today. I want to start off talking about your background.
All right. So where should I start? Thank you for having me, first of all.
Yes, absolutely. It's such a pleasure to have you here. So I want to start with like growing up in Japan. You were born and raised in Japan. You speak Japanese. You're joining us from Tokyo today.
Yes.
But you don't have a Japanese passport. In fact, you don't have any passport. Can you please explain this to us?
All right. Okay. So this Taejun TJ is a Korean name. My parents are Korean, but I'm stateless, so I don't have a passport. Wherever I go, I bring my travel document, which is, the made under the laws for refugees in Japan. So before COVID, almost every week I used to cross at least one national border, and I visited many countries where I work. In some countries, whenever I try to enter the country, I'm taken to a separate room surrounded by, say, the airport policeman or whatever. And sometimes I need to how do I say, explain where I'm coming from.
Yeah, that would be a hard thing to explain.
Yeah, so it's due to, I think, the complexity of or the void of proper legal frameworks for those who came to Japan before the end of the war. In a nutshell, my grandparents 80 years ago came from Korea Peninsula to Japan, but back then Korea was part of Japan. So they came to Japan as a Japanese national, and then after the end of the war, they became stateless, and I inherited that status even today.
Wow, and that's passed down generation to generation.
Yeah, that's the I think the rule for the I think the typical things for many nationality laws in Japan and many Asian countries. Yes, there's an option for me to apply for Japanese nationality, but I personally think that it's a good reminder because now I think I'm an entrepreneur. 2 years ago, I became the one of the young global leaders of the World Economic Forum. But still, whenever I try to cross just one border, it reminds me that I'm nothing in front of this nationality framework. And whenever I encounter this kind of things, I always think about the marginalized people whom we are serving. So it's a good reminder in a sense.
Yeah, absolutely. And clearly you've spent your career working with marginalized people. I guess, how has like growing up, Korean in Japan, especially with no passport, really shaped the way you think about impact in your career?
Yeah, so I think there are roughly 1 million Korean Japanese people living in Japan. And most of them already acquired some nationality, especially Japanese nationality. For example, Masayoshi Son of SoftBank Group. So he used to have the same status as mine. So when he determined to study abroad, I think at UCLA, and then he acquired a nationality because otherwise he couldn't obtain the visa back then. So anyway, there is a 1 million people community, and I was born and grew up in that community until I graduated from the university.
Got it. And after you graduated university, I think you studied law, and then you started working in private equity.
That's correct.
Yeah, no, go ahead.
Yeah, let me explain the background. So I think it's natural for me to aspire to be a human rights lawyer. So when I was a college student, my major was human rights, and yeah, I wanted to be a human rights lawyer. And back then there was the September 11 terror attack, followed by the war in Iraq and Afghanistan. And even in Japan, there are street protests against the war. I participated in many of them. And what I realized is that, yes, human rights is a great thing, but I mean, I might be still wrong, but I felt that the rule of the game is capitalism, if you like it or not. So I thought maybe I should learn the capitalism if I really want to pursue my sort of idea about human rights related situation. So back then, so I didn't have any knowledge about economics or business, but I thought maybe the best industry to learn capitalism is investment banking or private equity. And that's why I started my career at Morgan Stanley. I used to work for real estate, hotel, private equity investment division of the investment bank, Tokyo office. And then I moved to Unison Capital, which is which was back then the largest private equity fund manager in Japan.
Got it.
Yeah.
But while you were working in private equity, you also started an NGO called Living in Peace.
That's correct.
Yeah, so can you tell us about that? I mean, you were private equity guy during the day and running an NGO at night. Tell us about that.
Yeah, so the context was I wanted to be a human rights lawyer, but I changed my idea and entered investment bank. And after a year or so, I realized that this culture or the way of thinking at the investment bank, it's no criticism, by the way, is slightly or gradually encroaching in my sort of mindset. So there, everything is translated to the numbers, right? Which is not a bad thing, but I felt that maybe I might forget about my initial ambition or aspiration. And I think, yeah, it's nice to start something new by myself. And that's why I founded my own NGO 13 years ago, after I think 12 months after I joined Morgan Stanley. And what we did were two things in Japan and outside of Japan. In Japan, we have supported, and even now I'm personally supporting children living under alternative care system. So it's like foster parents, children's homes, etc. There are 50,000 children in Japan who are not living with their biological parents. And their poverty level, education level, everything is much lower than the national standard. And I think it's a big issue for the country. And I am still the national committee member to alter the system or to just improve the system of child welfare policy in Japan. So that's one thing that NGO was doing. And another thing was microfinance. Back then there was no microfinance investment fund in Japan. And we spend our weekend, holiday seasons, vacation to visit the developing nations, and we conducted due diligence by ourselves. And we launched the fund using crowdfunding and made, I think, around 10 investments in microfinance institutions. And all of them turned out to be quite successful. So then I thought maybe I can start this as my full-time job. So that's my journey with my NGO. I just recently resigned as the president of the NGO, but I'm still with them.
Got it. So really, Gojo was born out of living in peace, and now that's.
In a sense, it's I think the combination of my professional career and my NGO career, because Gojo is a holding company of microfinance institutions or the other financial service providers, and what we are doing is quite similar to, I think, in a sense, private equity or like the investment company like SoftBank, although we participate heavily in the operation and technology side of the local operation, the local business.
Yeah, let's talk about Gojo. You know, you guys invest in microfinance companies, and your footprint today is in Cambodia, Sri Lanka, Myanmar, and India, I believe.
Great memory, thank you.
So maybe let's talk about Gojo and the unique approach that you guys take to microfinance.
Right. Sure. And I prepared. It's not prepared. I just took I have my company introduction presentation, and if you don't mind, I would like to share that with you.
Yes, please.
Okay. So, okay, maybe can I use 10 minutes or so?
Sure, I may interject with questions though. And
All right, great.
if you have questions, please feel free to write it in the Q&A box as well.
Great, can you see the presentation slide?
Yes.
Right, so yeah, so our company's vision is to create a world where everyone can determine their future, and we are working to extend the financial inclusion to everyone. So in 2012, when I was invited to join Summer Davos conference of the World Economic Forum, I realized that in 21st century, an individual can make a private sector version of an international organization. So World Economic Forum used to be an NGO founded by an individual called Professor Schwab. And he spent 40 years, and then now World Economic Forum is like, private sector version of the United Nations. And I thought maybe I can do the same thing in financial inclusion segment. And that's why we determined that, okay, we are going to make the private sector World Bank by 2030. So anyway, it has been 6 years since we started the journey. And this is the rough, the snapshot of our business. So what we are doing right now, although we want to expand our business more in saving segment, is mainly microcredit, which is the business loan, typically for low-income households in developing nations. And this is let me share with you maybe just 4 numbers. So there are roughly 1 billion households. So in terms of population, it's like 4 billion people who are unbanked or underbanked. Underbanked, the definition of this is that people don't have access to useful financial services, even though they have bank accounts. So many of them living with low income, and smartphone penetration ratio, it varies from region to region, but in Asia, it's still very low. If you go to big cities or younger generation, it's much higher. But our typical customers are middle-aged women, and smartphone penetration is low. And also, literacy ratio is also not that high. So 30% of the people cannot read or write. And therefore, microfinance has used people, branches, papers, and cash. And to make the business sustainable, they need to do two things, and that these two things are becoming a big bottleneck in financial inclusion. One is it's quite inconvenient, it's slow, inflexible, and the lending driven. Many microfinance institutions are depending much on lending. We ourselves are also in the same situation right now, but we at least have the aspiration to change that. And another reason is the thing bottleneck is that it's quite expensive. Let me explain further why it's that expensive. So this is a typical cost structure of Asian microfinance institutions. And the biggest cost component is funding cost. And it varies, by the way, from country to country according to the inflation level or etc. And the second biggest cost component is personnel cost. So if there is no friction in the world, even low income households, because most of them we pay the money properly, they should be able to enjoy the loan at much lower interest rate. But due to this high operation cost, people need to pay much higher interest rate. And let me explain further why personnel cost is that high.
Hey, TJ, Eldwin from the audience is asking, is that 30% per annum or per month?
Per annum. Wow. Per month is like, yeah, Shiroclate. Yeah.
Yeah, per annum. Sorry,
So
go ahead.
if you do breakdown, personnel cost can be broken down into staff and average salary, total asset, which is in many cases loan, clients per average loan size. So then you get two key KPIs to look at the financial aspect of microfinance business. So staff to clients ratio, typically it's 1 to 200. By the way, for example, Bank of America, it's 1 to 300. And if it is Ant group, Ant financial normally, it's 1 to 70,000. So that's the scale that you might want to know. And average loan size also is low. And as a result, the personnel cost ratio is very high. And another issue I think is most of microfinance companies are subscale, very small, so it's not easy for them to enjoy the lower cost of fund. And yes, surely the finance is the scale economics business, so the productivity tends to be very low. So our approach to solve this issue is one is global scaling and another is tech application. So except for some countries like Indonesia, India, and some other big nations, even one become the biggest player, your scale is not that big enough to invest heavily in the technology. So by scaling globally, you'll be able to enjoy the very large the scale, which can easily absorb big tech investments. And also by diversifying the sovereign risk, you can enjoy the lower cost of debt. And what we are also doing right now is to share the best practice from one company to another. And the tech application, I think this is what many other fintech companies are also doing. So Gojo is, as I briefly said, it's a holding company. So we acquire the majority stake or establish group financial service providers in the world. And what we do is to provide fund and expertise, which is one is management support and another is technology related support. And the third thing is monitoring. The third part also is very important because ultimately this is a finance business, and we are in a sense a conduit in which by which money flows from those who have money and those who need. And to achieve that, we have to, have great governance control scheme such that investors can comfortably invest in us. So our journey so far, when we started the company in the first 12 months, we started the business in 3 countries simultaneously. And we proved that we can do the business in many countries together. And then we entered Series A and B financing, and then we entered India. And until 2023, we will allocate roughly 80% of the capital to India. There are 2 reasons. So one is in India, I think we can scale business very fast. And also, we believe that India will be the source of the next generation microfinance revolution using technology. Let me a little bit digress, but when I visited China 15 or 10 years ago, I had an opportunity to meet Chinese entrepreneurs. And I was really amazed by the quality. And I thought that, okay, they will dominate the world. And that's what's happening right now. And 3, 4, 5 years ago, I had the same feeling in India. And I think the very big thing will come. And many great entrepreneurs, engineers, practitioners are working in the financial inclusion segment. So I think after growing and being successful in India, I think we'll be able to export the business to the rest of the world. Yeah, surely finance business is regulated. So we cannot just cut and paste one successful model to another. For example, in India, the ID system is very strong, and that's not That's not in the many countries. But I think 80% of the business model can be exported to the rest of the world, and that's what we are doing. The long-term goal remains the same since day one. So by 2030, more than 50 countries, 100 million customers. And now, this is how our balance sheet looks like. We have many shareholders, lenders, etc. And as for group companies, we have 7 companies in 4 countries. And in India, due to the regulation, we can do many business from one entity. So we have 4 entities there. Yeah, that's where we are. Let me stop here. If you have any questions, I'm very be happy to answer.
Thank you, TJ. You answered a lot of the questions I was going to ask you, so thank you for that. But I do want to go back to the point you raised about supporting the MFIs in your portfolio, especially with technology to help you and them scale. Can you talk a little bit more tactically, more explicitly about what some of those technology tools are and how your MFIs use them?
Right. Okay. So because I spent 10 minutes already, so I ended my presentation in the middle. So I think I can just share the slide again. Okay. So before talking about tech, let me explain. So these are the 3 things that we care about a lot. Operation first, and then apply technology. And there is my favorite quote from Bill Gates. So automation applied to an efficient operation will magnify the efficiency, but vice versa. And that's what I realized when I started the business. So the altering or transforming microfinance business using technology was in business agenda from day one, but we couldn't do that because I felt it was premature to do anything technical. So that's why we spent first 4 years to enhance operation. And using technology, what we are doing right now is cashless, paperless, and algorithm-based lending. And these services are provided according to the tech readiness of our customers. So as I explained in the beginning, most of our typical customers don't have smartphones, and some of them are illiterate. So one of our group companies, Satya, from day one, they started this cashless microfinance services using fingerprints. Satya is the only microfinance institution in India succeeded in doing this. So this meeting, microfinance collection meeting, is a typical thing for many microfinance institutions. But the big difference is that customers don't bring cash. What they need to bring is just their Aadhaar card, ID card only. So they press their fingerprints, then the payment is done. The key part, I think, is back end of this business is back end. I mean, the core banking system of this business is the completely ready for any digital service. So when COVID pandemic kicked in, we quite immediately launched the payment service called Satya Pay, where our customers, if they have smartphones, they can use smartphones to repay the money. So that's one example, how we address the reality of our customers. And the second thing that we are doing.
Yeah, sorry, TJ, let me just interject. One of the
Sure.
questions from the audience was from M. Novman, whose startup is working towards a mobile payment app for non-tech savvy users, and they just completed their first pilot. The question was, do you think an app like this will improve cash collections for microfinance agencies? Based on what you just shared, it sounds like the answer is definitely yes.
Yes. Yes. Okay, okay, great. Yeah, especially in Cambodia, the partner with the money transfer service providers, and this is what we do in Cambodia. It's still a pilot. So we circulate tablet PCs to the local agents who are typically the shop owners like this. And then so our clients, when they come to our agents, we call them M-Lady, then they are well trained, so they can put the customer's information. And then loan assessment is done automatically, and we pay the disperse the money. Maxima is our subsidiary in Cambodia. And as they repay the money, their score gets updated, and so they can apply for a bigger loan if they need. For more tech-savvy clients, typically MSME, the small to mid-sized enterprises, especially merchants. So we are doing supply chain financing. So many SMEs face working capital constraint, mainly coming from the gap between their payment cycle and the sales cycle. And also it's too small for banks and too big for MFIs. And so one of our group companies, LoanFrame, is providing the solution. So they get data all in electronic form, bank reports, invoice information, tax reports, etc. We process them automatically. And after a confirmatory phone call, we complete the loan underwriting. And then so we notify the scores, then big corporates, if they sell goods, they can get money immediately. And these merchants, we pay the money to the banks within 3 to 6 months. So these are what we are doing right now. And we are also these days having the working group to think about how we really can innovate the saving or the saving service for our customers. So anyway, the key is to start with the reality of our customers. And I always love, and I really want to go, but I always love to visit the field and spend time with our clients or the typical villagers in the field. And then yeah, we always learn a lot to come up with the better solution.
Yeah, thanks, TJ. I think before we move on to talking a little more broadly about microfinance, I just want to ask for you and for Gojo, what are some of the biggest challenges you face, especially using technology in microfinance? What, either from your investors, from the MFIs you serve, from their customers, what are some of the biggest challenges you face?
Yeah, so I think the fundamental difficulty for typical microfinance institutions to apply all these things, I think it's system side, backend, so core banking system. So up level, the new things, I think doing something new at that up level is relatively easier, but always the making a centralized core banking system is the big challenge. And as we get bigger and we have, 7 companies in 4 countries, so we are at least developing data lake such that we can collect all the data sets in the same the structure. But this is I think the biggest challenge. I think every other the player is, I believe, facing the same challenge. And also if you're big, it typically takes 2 to 3 years. And in the worst case, by the way, in Japan, the one bank just completed their system update. It took 20 years. So if it takes 20 years after the update, already your new system is already a legacy system. Anyway, the system side is the biggest challenge, I think. And also, once you develop a great system and backend, then I think the design of the product will be another challenge. I quite often encounter the services which are developed by pure supply side perspective, just ignoring the reality of the customers. So that's I think another challenge, I would say. So for example, if we really want to cater to the low-income households in developing nations and the most marginalized people, many of them don't have smartphones. So yeah, it's great to envision that technology will change, will be able to change everything in the future. But I always love to see the reality and start from that.
Yeah, 2 questions from the audience, TJ. One, thinking of, actually addressing challenges for customers, but with your system, how much does the actual interest rate decrease for your borrowers? And then the second one is, how do you go about expanding into new countries? Are you starting your own company or?
So our average lending rate right now is roughly 25% or lower. So it depends on the country and it depends on the business. If it is typical microfinance, in USD, it is right now, I think less than 18, 16% or something. So in India, typical microfinance 24, 25, housing loan much lower, 18% or so. So that's the level. So this interest rate question is always quite tricky because from country to country, the base rate is very different. So what I always look at is the spread rather than the interest rate. And I personally believe that spread should be within 10% at most. And it can be if we work very hard, it can be 5%, 5-7 maybe. So that's a level that I'm thinking. As for country, so we have 70 target destinations in the world. But we don't think that we can go everywhere. Maybe at best we can go 70% of them. And that's why we envision that we work in more than 50 countries by 2030. Now we are focusing on Asia because I mean, given the logistics, it's much easier for us to look at the or Asian countries and the. So we will focus on India. 80% of our capital will be allocated to India, but using remaining 20%, we would like to allocate to the other countries. We are looking at Indonesia, Philippines, especially in Asia, and we might also start our business in a small scale in Africa too, because the rule of the game might be a little bit different there. So I think it's nice if we start the business in a small scale such that we can learn a lot to be ready for the rapid business scaling after 2023.
Got it. Thank you, TJ. I want to talk a little bit more broadly about microfinance.
Sure.
Microfinance has kind of swung back and forth in public favor. It's been like a silver bullet to solve poverty. Sometimes it's been discredited because of lack of data. Sometimes it's been severely maligned because some of the leadership of MFIs have engaged in some major public scandals. So I'm wondering for you, how do you see the effectiveness of microfinance, and are there some key ingredients for success?
Thank you. Yeah, this is the, long-lasting debate. And obviously in the academic sector, the most influential the researchers are the Esther Duflo and the Bernazzi, I forgot his name. So they conducted our study using the RCT, and they claimed that the microcredit doesn't have any impact on income improvement. And just recently they issued a new paper in 2019, and they slightly changed their argument now. So if microcredit is provided to the people who already had a business before borrowing the money, then microcredit did improve the income level of the people. And so that's a good thing. So that's the impact of the microcredit right now. But the biggest impact, the most impactful business or microfinance services service is obviously saving. So it's like no need to perhaps explain, but because if you want to improve your life status, you have to save. No question. And unfortunately, usually for many financial institutions, saving doesn't generate any revenue, and instead it incurs cost because you have to pay the interest to the depositors. So that's why I think the entire sector has evolved upon the lending business, but that I think needs to be changed, and there is no question about the impact of the deposit, or the saving. So that's what I see. And on top of that, another thing that I want to that emphasize is that financial service in general is sort of social infrastructure, and access to financial service, I believe, is one of the very important human rights, or that at least human rights. So even let's say the impact of financial services on poverty alleviation was not that great as we expected, but at least having the access to basic financial services, useful financial services, does improve the utility of or the happiness level or satisfaction level of the ordinary people in the world.
Got it. And question from Kunwar from the audience. What are the risks involved in microfinance specifically? And I want to add on to that. What are the opportunities and risks that you see in microfinance, especially in this, kind of post-COVID world?
So risk in many cases. So it's related to the one more question. which is why the credit cost is that low. So um, the biggest risk in microfinance is political risk, almost always. So whenever the default ratio jumps up to 10% or 20%, almost always it's due to politics. In India, for example, 10 years ago, there was a huge microfinance scandal followed by the microfinance crisis carried out by the politicians. And so that's the biggest risk. So it's quite common, but before the election season, some politicians say that, okay, if I become the governor or minister or whatever, you don't need to repay money. So that kind of campaign is everywhere, and that's the biggest risk, I would say. But if properly run, microfinance, especially if you have this face-to-face channel and do the loan assessment properly, the default ratio doesn't go above 1%, 2%. In our business, for example, before COVID, our default ratio has never been higher than 0.5% for the last 6 years consecutively. So yeah, because the politics is the biggest risk factor. We always care much about the state diversification, especially in India. This political risk appears at state level. So they typically say a governor bans microfinance. That's what happened in India before. So as long as we diversify the risk, I think we can manage it wisely.
And TJ, I'll get to the opportunities in a sec, but you said that one of the key ingredients for success and is actually being able to have a lot of those face-to-face, in-person interactions. But how do you manage that in a COVID environment when we're really not supposed to be meeting face-to-face or transferring cash hand to hand? How do you manage that?
Yeah, that's the biggest the challenge that we are facing. So by the way, microfinance has shown the resilience over the last 4 decades. So since it's the advent. So regardless of say natural disasters, civil wars, even wars, people, especially the low-income segments in developing nations, they engaged in the daily business activities, and therefore they could repay the money. But this time, the biggest black swan, I should say, is lockdown, because they are all prohibited from doing any business activities for a few months or sometimes several months. So that was a hard hit for many of our customers. And yes, during the lockdown period, we couldn't meet our customers, and this collection became very, very difficult. But fortunately, and this is what I predicted with a little bit hope, which is lockdown is, I should say, a luxury. So many people can't afford, many governments can't afford that. And many governments in developing nations, especially India, they will not do any further lockdown because they know how it damages ordinary people's lives. So unless the next lockdown comes in, I believe that these things will go back to normal in a half year or a year or so.
Got it. So you answered my other question about the opportunity as well.
Oh,
One more.
Sure. Yeah, please.
Oh, sorry. Go ahead, TJ.
No. Opportunity, right? And so obviously, so saving is one thing, and these days, related to saving, we are very keen on how we can perhaps update Rosca. Rosca is like it's a saving group thing, and it's very, very interesting model. So if we think about it, many financial services are coming from, how do I say, some grassroots level money and management, the practice. And then, so people used to lend money among the group, and then they they began to form a bank, and they began to do this more institutionally. And the Rosca is pure grassroots level activity, and it's very interesting. So that's one opportunity. And I mean, even in lending business, I think underwriting side, it's still labor intensive, and I think we can be automate more of the process. Uh, even in lending space, I think there are many great opportunities, especially for teenagers. Um, I think there should be more pure mobile digital lending service. That's a great opportunity, I believe.
I want to ask a question that someone actually wrote in during registration was, is there still room for MFIs in the time of COVID, considering many banks are also targeting microfinance clients?
Say that again, sorry?
Do you think there's a threat of banks also targeting microfinance clients, especially during COVID? Is there still a room for microfinance to play?
I do not think so. It seems similar, but a little bit different business. And the people working for banks and the MFIs are very different, and their strengths are different. So I do not think that microfinance, businesses, replaced by the banks. I think in the long run, there is a challenge. I think fintech players will be the major competitors in the future, where I think smartphone penetration ratio goes to maybe up to 70-80%. Then I think fintech players will also thrive in remote areas. So until then, I think we don't see the competition with the typical the banks or fintech players, but in the end, I think we will have to face it.
Got it. Yeah, it'll be interesting to see how you take them on. One question we have from our good buddy Taka in the audience. It is impressive Gojo has raised such a large amount of debt in such a short amount of time. Do you have any advice for fintech startups looking to raise debt at a lower cost?
I mean, in a country, sorry, like India, the lending from banks is purely, I think, the credit scores driven. So you get credit scores from the credit rating, I'm sorry, from Standard & Poor's or Moody's, and then you can get certain amount of the debt at a certain interest rate. But other than that, I think one thing is maybe we might want to think about any guarantee scheme by leveraging the shareholder support. That's number one I can think of. And another thing, which is I think what we have done in Japan, is so banks are typically, people say banks are bureaucratic and that they follow the established rules and policies. But I mean, they're always as a human being. It's run by humans. And what we have tried to do was how we can make them touched and how we can make them our supporters. So for example, our first lending, the first borrowing from Japanese banks. So it was like very difficult because the loan officers, it's the first time for them to lend the money to microfinance business. It's a Japanese bank. So their sort of career was at stake when they brought this to the credit committee, and but still that person tried to push this deal, and the loan funding happened, and so this kind of things do not disappear. So we always try to whenever we do our business, we always try to abide by our guiding principles, which stipulate our management principles about and the values. and we have our guiding principle sessions every quarter. And I think in almost all meetings, at least one person mentions our guiding principle in the meeting. And all these things I personally believe helped a lot. It's not like the easy answer to you, Taka, but it really helped a lot for me or for us to raise funds from the many lenders.
Thank you, TJ. We're just about out of time, but I have one last question for you.
Sure.
So as you look forward, what are you most excited about with Gojo and microfinance, and what scares you?
Excited about Gojo per se, or
either Gojo or microfinance. As you look forward, what is the most exciting thing to you, and what is the scariest thing?
Exciting thing. So, before I die, perhaps we'll be able to see the world where everyone can enjoy basic and useful and affordable financial services. That's quite exciting to me because I myself was saved by financial access. My parents saved a lot and they raised funds from somewhere to afford my education, but their efforts alone were not enough to afford my education. But luckily, I was born and raised in Japan, so there are many great scholarship programs. So I myself was saved by financial access. And it's nice to see the world where everyone can enjoy it. That's quite exciting thing to make the world a better and a fairer place. Worries. So there always is a sort of the dilemma between serving the customers better and making profit, because Gojo is a profit, for-profit company. So we have to make certain profits to, make our shareholders and the lenders happy. But we are founded to, to serve our customers better. And the only way, I believe, is innovation. Unless we innovate something, we always have to face this dichotomy of the making profit or serving clients. To overcome that, I think we have to keep innovating on our business such that we can provide better service than any other players while making certain profit to make our stakeholders happy.
Got it. Yeah, that is a scary prospect. TJ, that's all the time we have for today. Thank you so much. If folks want to reach out to you or get in touch with Gojo, how should they contact you?
Oh yeah, the gojo.co. Maybe I can just, I should have shared that. I don't know how to do this. The panelists for.
If you want, we can share it after the show too.
I just sent the chat. It's just very short. It's not .com, by the way. The .com. If you press .com, then you will see maybe the hand soap bakers, the manufacturer.
Good, got it. Thank you, TJ. Thank you for being our guest. Thank you, audience, for being here. And thank you again to Brankas and APIX for sponsoring us. We will see you again next month for the next Green Room. Thanks, everyone. Take care.
Thank you very much. Bye.
Bye.